So, hello everybody. Welcome to the Enhancing the Accountant and Bookkeeper Relationship series. There was just some information about me. We'll just move on to the next page. So that's me. So I am hosting the series, which of course is featuring CAD accounting, and I am the founder of Cloud Bookkeeping Services and Tony's Bookkeepers Bootcamp. I am a 2017 Intuit Firm of Future runner-up, a certified bookkeeper professional, a member of the Intuit Trainer Writer Network, a 2017 Black Swan alumni, an advanced certified QBO Pro Advisor, a certified desktop Pro Advisor, and a volunteer mentor to Futurepreneur Canada. And I have over 20 years bookkeeping and income tax experience. So we've got John Carter and Bob Hamilton of CAD Accounting with us again today, and we deal with John and Bob quite frequently on several accounting files, and yeah, we've got a really good relationship. And John and Bob, are I guess doing this to try to enhance other bookkeeper accounting relationships, because we've learned a lot from each other over this time. So if you want to take it away, am I sharing on Bob's screen?
John, you're starting?
Sure.
Yeah, so I'm stopping sharing, and you guys, one of you guys can take over and take it away.
Okay, so this is our series on just little elements that we found a lot of trouble with the different files that we've been getting from bookkeepers. Can everybody see the screen okay?
Yep.
Okay. So today we're going to be talking about accounts receivable. Just a quick recap from last time. Last time we talked about period 13, the year end. Once you've done all the bookkeeping, that's all you have to do, right? No, there's a lot of other things you have to do, and a lot of those things we're covering in this series. Today we're going to be talking about accounts receivable specifically. In the last one, we just kind of did an overview. So, what do we need to watch for with AR? We've got a smaller group. I'm not sure if we need to use the chat, but any ideas from the group of what are some key things we need to watch for with regards to accounts receivable at year end?
I would make sure that they're not aged.
What do you mean?
First and foremost, make sure that they're not too old, that they shouldn't be written off.
Yeah, okay. Art echoes that, write offs. Okay, so what determines if you should write off a bad debt? I guess. Actually, you know what? Let's hold that. Let's come back to that. What are some other concerns in general about AR?
Is there a problem with collecting, maybe?
Problems with collection?
Maybe they need some counseling on how to collect their AR, or the use of one of the apps out there or something.
Okay.
Oh, good.
I don't know if this is a preliminary before the file is submitted, but one of the concerns I have working with accountants is when they give me an adjusting journal entry back and it goes to the AR and it doesn't say which customer it's for. It's just an AR entry, because when we're booking the entry, we have to assign it to a customer.
Yeah, I think that just demonstrates the difference between somebody who really knows the QuickBooks environment versus someone who doesn't.
Yeah.
Because I agree, it should be specifically identified unless it's a allowance for bad debt entry. Art mentioned, did he bill out everything? That's a very good question. We're going to come up to some of that in a little while. Karen mentioned balance to control account. What do you mean?
You can feel free to unmute yourself, but that's easier, Karen. Again, we've got a small group, so that'll be fine.
I think that means, does the subledger or your listing match, the total of it match what's in your GL?
Right, that's what I would guess too.
That is a challenge that I've seen before. When you're running reports, sometimes you have to make sure it's on accrual basis, not cash basis, things like that. You're selecting the right period. I've seen frequently where people freak out, and it's just a matter of they're looking at the wrong type of report, or they're looking at the report in the wrong way.
Right. So Karen,
Yeah.
she
Okay.
posted her
She just
answer as well
confirmed
too.
that. That's the same. Okay. Well, those are some good concepts. I'm going to continue on, and we're going to look at our major list here. So the first question we always ask is there cleanup required? Does a customer owe you negative 16 cents? Does another customer owe you 25 cents? Are these really worth collecting or really dealing with? Generally speaking, we would consider these amounts immaterial. It would be nice for your customer if or for your client if their books looked nice and clean and didn't have these hanging amounts kicking around. Bob, did you have anything to add about cleaning up AR?
No, I think that's pretty straightforward. It's just looking for items that shouldn't be or should be dealt with before you finalize the AR listing.
Yeah. Okay. So, just an example of some cleanup things we've taken from real life, changed the names, of course, so that you can identify who it is. But things like this are definitely flags for us. We've actually gotten files in the past where there were so many negative ARs booked that the actual accounts receivable balance was in credit. So these are things that definitely need to be watched for. They might be legitimate. It could be that the customer is owed a credit, but these need to be vetted and need to be, I guess, validated to make sure that negative balances are appropriate.
John, what's the best way to let the accountant know that we have vetted it and it's justified? Is it just to put the report into an Excel version with a note on that cell, or?
However it works with the particular accountant you're working with. With us, when we look at the AR in our first look file, that would be the appropriate time to tell us, this has been, all balances have been validated.
Okay.
Kind of thing. Yeah. So, and yes, that was a dog on the bed. So, are the invoices collected promptly? That's another very important question. Different industries I know have different collection terms. Seems like construction can't collect anything under 90 days. And then there's other industries where if there's anything in AR, it's actually suspect. So a lot of retail businesses like that, why would a retail business have an accounts receivable? Those are some questions that kind of need to be asked. Bob, anything to add about being collected promptly?
No, I think it's pretty straightforward.
Pretty straightforward, yeah. All right. So collections is very important when it comes to getting financing. If the client is really good at making sales but not good at collecting, it makes it more difficult for lenders to finance their operations. One thing we're thinking of doing is offering a collection service. Is this something that would be of interest? Is this something you currently offer your clients? Or how are some of the ways that people manage this currently?
Well, I guess I'll start.
Stimulate some discussion.
Yeah. So from my clients, we actually do offer Invoice Sherpa, and that is a way for them, and we kind of offer it to, I guess, twofold. We offer to some of our clients because our clients are very cash flow sensitive because we choose to deal with small startups, right? So, and the small businesses. So some of them we offer just to set up Invoice Sherpa and they can just use it on their own. And some of them we actually offer an accounts receivable package, in which case we are monitoring and managing the Invoice Sherpa. And so Invoice Sherpa, if anybody out there doesn't know about them, they are free for ProAdvisor account, but they are an accounts receivable app. So it will actually send follow-up messages. It does look, it's still logoed to yourself, but it looks different than the QBO, and then you can set up parameters to follow up 7 days, 15 days, and whatnot. So that's not going to take care of anything or of everything. You still may have to make some phone calls, but since we implemented that 3 years ago here, most particularly on our tax files, we found that actually it did speed up our collections rate considerably. And a lot of people look at that and they see it and it looks more official. It doesn't look like it's coming from you. So they think, oh my goodness, I better pay this instead of, putting it off and not taking it seriously. So that could be a good first step that we do here. Again, it's not necessarily going to take care of everybody, but it takes care of a good amount.
Yeah. The last time I looked at Invoice Sherpa, I remember the price point being a little bit frightening. What is the current price point? Do you know offhand?
It is still sitting at $49.99 US. They are working at Canadian pricing.
Okay. Yeah. When I looked at it, it was significantly more. Yeah.
Okay, no, it was just Sean himself, and it's so now Sean is actually got in an investor, and they're actually Montreal, so they're Canada based. So we're going to see a lot of changes for Canada. They're really big in the States. They're not like in the States that they actually will deal with industries directly, like they deal with the dental industry, and so they're dealing with industries directly in hospitals and whatnot instead of just through the bookkeepers. So they've got a much bigger account base in the States, but now that they're Canadian based, they are working on Canadian pricing and Canadian content, and they are working on allowing like a direct debit through them, so people can pay, click and pay to your credit card through there. So they're looking at expanding into things that we didn't have before. Now that they are Canadian based.
Okay, well, it sounds like.
Yeah, Sean's still working in the back end out of Oregon.
So it sounds to me like there's a real opportunity for a value add for bookkeepers to offer help with collections here, perhaps using Invoice Sherpa or whatever other method they might find appropriate.
Okay. Exactly.
All right. So that was something that was percolating in our idea. The next,
we offer that to our top tier clients. Like we offer that out of our packages. We offer that in our platinum package.
The next area about AR is it disputed? Now, Bob, I know you have a bit of a story about this.
Yeah, just from my own experience, we were working on an audit with a client, and they were having trouble with their accounts receivable. The agings kept going longer and longer, things, collections falling out of being collected turned into bad debts. And it turned out when they looked into it, their new accounts receivable clerk, who was supposed to be on top of all this, when they checked with him, there was a drawer full on the right-hand side of his desk. I remember it clearly. And it was full of queries from customers, issues they found in their invoices. Turned out what he had been doing was anytime a query or a difference showed up on his desk, if he didn't feel like working on it, he just put it in that drawer. And there must have been 2 inches of paper in there going back several months. So needless to say, that clerk didn't stay with the company very long. So
wow.
You really have to clear up the disputes, because many customers will look for any excuse not to pay, to whether they can pay or not. And a 25-cent difference on an invoice will give them a good reason not to pay. So
I was just going to add on top of this. This is particularly important when dealing with large customers. Also, with the collecting promptly, you need to know who you're getting in bed with. For instance, Walmart is notoriously slow to pay. So if you have any customers considering getting involved with Walmart, it really needs to be a well thought out decision-making process. There have been cases such as the famous Bix Pickles cases where Walmart has really been able to put the squeeze on a customer and resulted in Bix Pickles essentially getting a 1% margin on the product sold to Walmart, which, who needs 1%? That's it's a little bit ridiculous. But I know that any dispute for an invoice with them, they just won't pay. And I know their average days payable is really, really long. One option, if you are looking at selling to a bigger organization, Bass Pro, Home Depot, Walmart, something like that, is to consider using a distributor and getting better terms from that distributor. You take a bit of a hit on the margin, but it's not as much of a strain on the cash flow. Okay. So now, Bob.
Tanya, you were quite right in saying that it's good to follow up with customers, send them reminder letters. In my experience, it's truly is the squeaky wheel that gets the grease. And
Yep.
and if you're constantly, I don't want to use the word pestering, but let's say reminding your customers, that puts you at the top of the list of people they're going to take care of. And they do have a ranking. I've seen that with many companies. So you want to make sure
Yep.
your business is at the top of that ranking.
And you need to have a policy for when you cut them off as well.
That's right. That's right. Well, and that's the one thing with going into, for bookkeeping now, I bill in advance. It's only the taxes that we use Invoice Sherpa for, and I don't file until I get paid. But a lot of people, they just forget and whatnot still. But bookkeeping, no, it's collectible in advance now. But of course, if you're trying to counsel your clients, well, and we've actually successfully been able to take some of our clients and actually have them turn around into advanced billing as well. So you're billing at the beginning of the month. So that is something that you could use when trying to counsel your clients, or again, look for an app, or just they've got to do the follow up, like you say, Bob. It's that people have an order, and sometimes people just truly forget if it's not in front of them. So sometimes it's not that they have an order; it's just they've forgotten because they're so busy.
Yep, that's possible too. All right. So another important one is reporting in the correct period. And again, Bob, I know you have a story about this.
Yes. We worked on a company. It was actually in the women's healthcare industry, and they were on a bonus plan. They were a subsidiary of a U.S. company, and they were running very close to their bonus measures at the end of the year. So they decided that they would take the first 15 days of the following year and process those invoices through the current year. And it was only when we connected their inventory to what they had billed out, and we saw items that they had billed still sitting in inventory, that we determined there was a problem. So these are real life issues that you run into with companies. So you want to check your cutoff, and it might be pretty simple might seem pretty simple from a bookkeeping point of view, but it's something that the accountant is going to at least think about.
We have something called the matching principle, which requires the expense and revenue to be tied to the same period in which they occur. So if you're billing somebody, say on December 31st, 2017, I don't know, perhaps inflate your cost of goods sold figure, that's really a deferred revenue issue, and it becomes something else entirely. So that's something to keep in mind. Reporting in the correct period is something that we do look at on a regular basis. Okay, so are they supported? Have you received the proper documentation? Have you received an official go-ahead? Does this customer require a PO before the invoice is created? Different processes for different customers. Bob, did you have anything to add in this area?
Just that if you are going to collection, the collection agent is going to need all the proper documentation, of course, before they chase the payment. So the documents are quite important.
Yeah, same thing for small claims if ever anything's going to get that far. And of course, the most important question is, are they collectible? I really like the choice of artwork for this particular slide. My first job in accounting, actually not true. One of my second jobs in accounting, was AR collections, and I was asked in the interview if I came with my own bat or if they had to supply a bat. So, but are they collectible? Is the customer still in business? Is it reasonable that's going to be collected? Are there any things you wanted to add about this, Bob?
Yeah, there are different ways, different methods you can use for determining uncollectible accounts. The accountant is going to want to make sure that your accounts receivable, if there are any issues in it, it gets written down to a collectible amount. So they will always scrub the receivables or want someone else to do that to make sure they're reporting a relatively conservative number on the balance sheet. So the other thing is, this is a good opportunity if you are trying to connect with your client. Just sit down and go through their accounts receivable with them, talk about their customers, the ones they have difficulty with, and they're really good customers. If you have a business that one customer is 80% of their business, then that points out a risk.
Big risk. So we've actually gone overtime already. Are people okay to continue? Because we were about to get into allowance for bad debt and bad debts write-offs. Is everyone okay to continue? Yeah, Tanya's okay. So I guess if you need to log off, you need to log off. It will be in the recording. So, okay. So what is the allowance for doubtful account? Essentially, you're taking an estimate of your current accounts receivable and saying that a portion is not going to be collected. You can take this as a bad debt expense, and then if the invoice truly becomes uncollectible, you can write it off against this allowance. So are there any questions about this portion right now?
Basically, if you think of it, the allowance for doubtful accounts is on the balance sheet, and it's a credit balance, so it offsets your accounts receivable. So your accountant is going to be looking at that to make sure you've thought about it. How much should you allow against that $100,000 receivable balance, and to make sure that some thought and work has gone into this. The other side of that entry is the expense, the bad debt expense. So this is really where the bad debt expense arises in the first place, not from directly writing off the accounts receivable to bad debt expense, although you can do that also.
So in this instance, we're still showing the accounts receivable, but we're offsetting it with the contract to reduce the overall balance by what we estimate might not be collectible. So next step is writing off. Hold on. Yeah. So if we're going to write it off, this is the basic entry. You're debiting your allowance. You're crediting that AR invoice for that particular customer. And now it's removed from both sides, but you've already recognized the bad debt expense.
So you don't want, in this case, to keep it even in your accounts receivable listing. You've exhausted all avenues for collection. This is a dead account. It's a bankrupt customer. So you want your listing cleaned up.
Yeah.
Sorry, let me just add, if I can just ask a question on that. So I do have an account that I actually wrote off. It sent them off to collections and just wrote off saying, you know what, nothing was coming through. I was done with it. A year later, I actually started to get a couple of small checks. What I've done with those is I've just added them as sales receipt under that client and just put a special income account for, collective debt. So that way it's being, because I've already written it off, so that way it's being counted again towards the sales. Is that sufficient to do in a case like that?
Yeah, as an accountant, there are a couple of acceptable ways, and you probably used one of them. If you start to receive payments on receivables that you've already written off, first you could just record it as a miscellaneous revenue item. So it's not really a new sale, but it's something like other income or miscellaneous revenue. The other
Okay.
option I can think of is you could actually credit it to the bad debt expense because it's kind of an offset to a bad debt that you previously wrote off. So I think I would accept both of those approaches. Now, if it becomes a very large amount, then materiality starts to play up, and I would probably not want my bad debt expense account messed up. So I would definitely lean to the other revenue type of account.
Yeah, see, and that's what I've done because I don't write off a lot. I've
Right.
written off. I mean, like I think I'm still at like $1,000 I've written off in however long I've
Wow.
been in business, 20 years. Yeah,
Wow.
it's not much.
Hey,
Oh,
Jonathan,
I
I
I
think
chase
We
we
need
them.
a
found
lesson
our
from
we
Tanya.
found our collection agent here.
Yeah, really.
I chase them.
Okay.
I hound them.
And
So how do you
squeaky
calculate
wheel.
yeah, exactly. How do we calculate the allowance for bad debt? We're going to go over a few different methods, but my favorite personally is always specific. Your customers are all different, and until you get a very, very large customer list, I think moving to a formulaic method is not as precise as looking at the specific accounts. So we're going to run through these really quickly. Bob, I'm going to let you take it away here.
Okay. Although as an auditor, I will say I used to love it when we went into a business and they used a formula. Boy, that's simple. And when you're given a budget of like an hour and a half to determine what the allowance for doubtful accounts could be, you had to go through like 5 pages of accounts receivable individual
Oh,
customers. You were going to blow that budget, and your partner was not going to be too happy with you. But here,
yeah.
the
That's for
first,
people with long lists. Most of our customers, I think, are probably under 200 customers on their customer list and know their
yeah,
customers very well. So
yeah, and in the cases where we've discussed this with our clients, they're very quick to point out the ones, and usually you'll find, as in the example on the screen, they're the oldest ones. Although you can sometimes get almost a current receivable that, for some reason, like your client went to visit them and the door's locked and the lights are off. You can get an indication that maybe you've got a problem there. So in this case, when you add up all those troubled accounts, you get your allowance for doubtful accounts at a credit balance on your balance sheet to offset this AR listing. Your balance is going to be $6,151.
so the specific method is exactly that, knowing which customer is in which position to pay. Just kind of from my experience, something that I've seen a fair bit of lately is people really taking advantage of not-for-profits and using their space and coming in and having a one-time event or a one-time festival or something and then disappearing from the face of the planet when the bill is presented. And I know that's hurt a couple nonprofits that I work with, and it's something to keep an eye out for to probably have some degree of qualification. If you're going to give a customer a $3,000 rental, you need to know that you're going to be able to collect that. So, Bob, did you want to talk about one of the formulaic methods?
Yeah, this is very straightforward. We can go through it quickly. It's just, and I've seen this used, you just take a percentage of your individual column totals for in your aging. So you might allow 25% of the 1 to 30 day, 50% of the 31 to 60, and then so on, percentages beyond that. Actually, these are on
Uh,
specific accounts.
mhm.
Sorry, not the aging totals. We'll come to that in the
Well, I
next
mean,
case.
That segues pretty well.
Yeah. So you use your aging, you make your allowance if the policy of the company is that. So you allow for 91 days and over. So now notice in this case, there's a pretty large negative in the 91 days and over. You don't want to include that in your allowance. So you're going to allow for the other 4 accounts here.
Now, again, it's very industry specific. I know that most construction companies are not collecting in under 90 days. So this definitely doesn't apply to every business. These are just different options.
Yep.
And then the last one is a formula based on aging instead of based on specific accounts. And yeah, pretty much the same thing. You're taking a percentage based upon how old the receivable is, but you're taking on the total balance instead of on the individual item. Do you have anything to add for that?
No, just here you get to a reasonableness check. Like I would say a $23,000 allowance, once you've gone through the calculation on 137 in receivables, is a little too high. You'll want to look back at the customer's experience, and you might want to adjust that. Remember, this is an art, not a science that we're doing here, and you really want to tie this into the to your client's past experience. So $23,000 just sounds like too much of an allowance for a business. So you'll want to check that pretty carefully.
Yeah, it's almost 20% of the entire receivables balance. Okay, so I think that brings us to the end. Are there any questions?
We love questions.
We do. Give everybody a minute to type, hopefully.
Mm.
Well, while we're waiting for people to type, what does CRA have a specific method of setting up like accounts receivable allowance or like your doubtful account allowance that they prefer?
There's the method, the accounting method that's used just has to be reasonable. Of course, they would prefer the specific method, but they recognize that it's not always possible. One thing that is very important that CRA does look for frequently is consistency. So if you're using a formulaic method, it's important that the formulaic method be pretty much the same year in and year out. And when you're producing the financial statements, there should actually be a note about how that is collected or how that is calculated.
Mm-hmm. And the reasonableness.
As far as an actual, exactly, reasonableness. If you've got an allowance for bad debt that's 80% of your AR, you're probably going to get some questions. You know, if you're writing off $60,000 every year and your corporation's only bringing in $250,000, you're going to get some questions. And from a business perspective, why are you, there's something seriously broken if you're legitimately writing off that much bad debt every year.
And of course, this is a case where you can always examine what the experience is in hindsight. So if your client has written off $100 in 1 year and nothing for the next 4 years, you'd have difficulty setting up a very large, you'd need some reason or some story. And it's always neat to get the stories from businesses.
I personally use, for CATA, we use specific accounts. That's it. We review every account individually on its own merits.
Hey, wait, we don't have any on collectibles, do we?
Oh, yeah, that never happens to us. I made some mistakes early on. Sorry, what was the question?
I was just going to ask, this is more about something I was trying to explain to a customer or one of my clients. They felt that anything that was on the AR at their year end should not be considered income for 2017. It should get deferred to 2018.
They
And
can feel and think whatever they want. CRA is
I
not going to agree with them.
I know, and fortunately, it's a company that it's a nonprofit, and they go through an external audit every year. And the auditor had a meeting with them behind closed doors and backed up what I was trying to say to them. But it was a conversation that I had had with them 3 or 4 times, and they didn't want to listen to me. But as soon as the auditor took them behind closed doors and said, "No, Kim's correct. It can't be done. Here's your slap on the hand. Suck it up, Buttercup." It's you know. I'm just wondering if there was something that could have been said differently. That I don't know.
Well, the accounting principle that all our accounting is founded and based on is that when the service is provided or the goods are delivered, the revenue is recognized. That's a principle, fundamental principle of accounting all over the world. So they need to find their own country where they can invent their own accounting process and move to that country, because it wouldn't be acceptable in any jurisdiction that I'm aware of. Like,
They weren't saying that it shouldn't be recorded, just that it should be moved to the deferred account rather than the
So that
current
it's recognized in the following period, probably
Exactly.
impacting the executive director's performance review or something like that.
Probably, yeah.
Yeah, that's not kosher.
Okay.
It's not kosher at all. As far as how to explain it, I would just say it's the matching principle.
Yeah.
The invoices were issued in this period. The services were delivered in this period. The revenue has to be recognized in this period.
I just wanted to make sure there wasn't some loophole out there that the client knew about that I didn't.
No, they probably heard it
No.
from some guy.
Yeah.
We are always
one of
we're
our
always,
friends.
Yeah, one of my buddies wrote off his blah blah blah, and now lives in a mansion. And,
Yeah.
one of your
Okay.
buddies is eventually going to get a pretty nasty bill.
Thanks, guys.
Yeah. Any further questions?
Doesn't look like it.
All right. Well,
Sounds
this
good.
is a pretty straightforward subject. This is one that we wanted to do early because we have seen a lot of issues with it. So hopefully there was value here, and people can take this away and, apply it to their customers, apply it to their businesses, and so on. I'm not sure what our next presentation in line is. Tanya, what's on the schedule? You remember? If you don't remember, we'll just announce it.
Yeah, I'm not sure because I know that AR was originally further down.
If
So I know it
people,
wasn't originally slotted for today, so I'm not too sure.
if people have a burning desire to hear us talk about any given topic, inventory or income tax accounting, liabilities, expenses, anything. If you've got a particular area that you're interested in, let us know. We'd be happy to drop in a discussion.
Otherwise, we're going to do what we want to do. So.
That's right.
Tanya, thank you so much again for hosting.
Oh,
Yes.
thank you so much. This is great.
Hope everyone found value. And yeah.
Absolutely. So everybody will have by tomorrow anyway. You'll have a copy of the recording, as well as it will be posted in all the groups. Oh, hang on, there's a few chats. Oh, just Art and Karen say thanks, guys.
You're welcome, guys. Our pleasure.
Yeah, great.
Yeah.
Great. Nice to see everyone.
All right. Take care, everybody. Thank you.
Thanks, guys.
Okay.
It was great.
We'll see y'all next month. Okay, thanks, guys. Bye.
All right.